Cathie Wood just dropped $19 million to buy more Tesla stock, which is quite a bit more than usual. As you can see, in the last 3 weeks, she spent 12 million, then 1 million, then 4.6, 4.1, 3 million, 1.4, 2.8. This is about 3 times more than the average when we look at all these numbers here. There is still quite a bit more room to go, but Cathie believes in Tesla stock. Otherwise, why would she be spending more money on Tesla stock than normal? Also, today, we set a record for how much volume Tesla traded. Today, there was more shares traded than in all of 2022, higher than any day in 2022. Tesla's trailing price to earnings ratio right now is sitting at 38, and its forward PE is at 24.27. Elon has said that if there is a bad recession, which he believes there will be a bad recession, although for every person that thinks there's going to be a very bad recession, you can find a David Rubenstein who thinks the recession will be light and short. And his firm has $400 billion in assets under management, so his words carry some weight, I would think. But my belief is that a very bad recession is actually the best thing that could happen to Tesla long term, not short term. Short term, it will be, I think, an absolute bloodbath for Tesla stock. However, if we do have a bad recession, Elon Musk still wants to continue growing deliveries, which would continually increase the market share of Tesla. Also, this would make it easier for Tesla to scale up after the recession, so profits would come back right after the recession, although during the recession they might be wiped out even completely temporarily. But after the recession, I think Tesla would have a much higher market share because Tesla makes 8 times more profit than Toyota per car. Also, I would say Tesla's biggest competitor really long term, at least in China specifically, is BYD. But also, China's BYD sells more cars, but Tesla makes 8 times more profit per vehicle. When they say more cars, they include hybrids as well. But still, 8 times more profit per vehicle. So Tesla has so much room to drop the price, while all these other automakers, they don't have much room to drop the price. And also, full self-driving. Only Tesla really will have a good solution to full self-driving, assuming that full self-driving will work, which eventually I believe will work. What is the date? I continuously said sometime before 2030. Hopefully it happens much more sooner than that. So during this recessionary environment, I would mostly look at deliveries, and then once the recession is over, I would primarily look at earnings after that. Also, I have seen some people complain about Tesla's inventory. Well, when we have more context right here, we can see that Tesla's inventory is really only 13 days of supply, and most of these cars already have buyers as well. So I think it would be more fair to have another metric which would only show unsold cars, meaning these cars are not in transit and they are just sitting in a lot basically waiting for a buyer. We do have some of those, and these are in China only, and we do have some Model S's and X's in the United States of America, but we just started exporting these to Europe and China, so that is not a problem, not at all. Just for comparison, look at Ford's inventory, close to 5 times more than Tesla's. Now that is a lot more worrisome. And you know that inventory levels are just going to get higher for all other automakers, making it much more difficult for them. And Tesla, it just needs to cut the prices temporarily, or cut the cost down, which Tesla still can, the gigacastings, 4680 batteries eventually, and structural battery packs. Because of a delivery miss, which was about 3% when it comes to delivery specifically. I do expect a lot of analysts to cut their price targets down, which we have now seen happen in many cases, but everyone is still saying buy basically when it comes to analysts. Only 2 analysts are saying sell. And the 12-month price target for Tesla from analysts at this moment, according to TipRanks, is $257, almost $258. I do expect that to come down a little bit more in the coming days, though. Once we have the compact car, the cheaper car, I believe that vehicle will sell more units than all of the models that we have right now combined. So it is going to be a very big deal. And Tesla has announced that it will talk more about this next generation platform on March 1st, which is Tesla Investor Day. It will be live streamed and it will be from Gigafactory, Texas. Another thing that I like to point out is that we did have years before where we grew under 40%. So this year we grew about 40%. Here we grew a lot more than 50%. And then we did have times before where we only grew significantly under 40%. And this is somewhat normal. Once you have such a crazy increase in just 1 year, you would sort of expect the next year to be a little bit slower if you look purely at just Tesla's history back here. Once you have a very big year, next year is often a little bit slower. So to me, this personally is a buying opportunity. I am buying more Tesla stock. Then the compact is released. That year, once it gets ramped up, during that period, somewhere there, I do expect perhaps significantly more than 50% deliveries year over year once we do have that next generation platform out and where it's starting to ramp up. And for those of you who didn't know, to send cars to Taiwan, actually, we don't send them from mainland China, we send them from Germany. Just because of all the rules and regulations, this actually makes a lot more sense when you take everything into consideration, although the shipping distance is quite long. And right here is Morgan Stanley saying that Tesla stock, basically right now, it's a buying opportunity. We reiterate our rating on Tesla, which their price target is $250, and believe recent share price weakness is a window of opportunity to buy the global EV market leader with long-term growth potential at a more reasonable price. We still see there being an attractive entry for investors as Tesla trades closer to our $80 bear case than our $250 price target. So it is not just Cathie Wood, and it's not just me who see this as a buying opportunity. Morgan Stanley too sees it as a buying opportunity. I do have a lot of family visiting at the moment. They will be leaving on January 6th. So until then, expect fewer videos from me, and then we should be right back to normal. And this is the buying opportunity of Tesla stock presented by Elon Musk. My name is Matt Posius, and I'll see you in the next video. Thank you so much for watching.